Assalamu alaikum. You're watching Views and News, and I'm Faisal Rehman live from our Islamabad studios. Today we'll be talking about a very important topic, and that is about the global economic outlook. Now, IMF has cut its global growth outlook for this year and the next year, that is 2023. World economy may soon be on the cusp of recession, the International Monetary Fund has stated, and we have been doing a lot of shows on this particular topic as well earlier, in which because of the COVID and then the Ukrainian war coupled with the inflation in so many countries and then the triggering recession, that is perhaps one of the major issues faced by the globe at the moment. Then it says global economic expansion to be 3.2% this year. 3.2% is the growth rate that they have set, rather reset, let me put it this way. Global growth outlook to further slow to 2.9 in 2023. So from 3.2 to 2.9. So we can predict that this year along with the next year means that there is going to be recession according to IMF. The outlook has darkened significantly since April. Again, April, May, June, July, September, October. These are the months where we will see more inflation in Pakistan. As we all know where the dollar is heading, we're not sure exactly what IMF is further demanding according to the ministers of the federal cabinet. They say that we have done whatever we could have done. But now it has been linked, this particular transaction of that tranche has been linked to those 4 billion US dollars which were short as far as the fiscal gap is concerned. Now, interestingly, what they want to do is that the Saudi government should ensure that they will give us that kind of money, and then the IMF is going to proceed further. So let's see where it leads. Before I introduce you to our panelists, our production team has prepared a report. Let's watch that first.
IMF's World Economic Outlook update of July 2022 has recently reported that the global economy is facing an increasingly gloomy and uncertain outlook, and higher than expected inflation in the United States and major European economies is triggering the tightening of global financial conditions. IMF's Economic Outlook reported that according to its baseline forecast, growth has slowed from last year's 6.1% to 3.2% this year and 2.9% next year, downgrades of 0.4 and 0.7 percentage points from April. Report added that despite slowing activity, global inflation has revised up in part due to rising food and energy prices. IMF added that inflation this year is anticipated to reach 6.6% in advanced economies and 9.5% in emerging market and developing economies. Inflation has also broadened in many economies, reflecting the impact of cost pressures from disrupted supply chains and historically tight labor markets. IMF highlighted the risks including war in Ukraine, tightened labor markets and global financial conditions, renewed COVID-19 outbreaks and lockdowns, and geopolitical fragmentation, which might impede global trade and cooperation, which can further slow down the economic growth.
So before we start the show, we'll take a short break. After the break, we'll return. Stay with us. Welcome back after the break. Now, to talk about this very important issue, we have with us in our studio on my right is Tauseef Zaman Saab, former president of Islamabad Chamber of Commerce and Industry. Thank you very much, Tauseef Saab, for your time. And on Skype, we have with us Syed Javed Hassan Saab, Chairperson, Economic Advisory Group. Syed Saab, pleasure to have you on the program, sir. Thank you very much for your time. And we'll also be talking to Tahir Abbas, Head of Research, Arif Habib Limited. He's going to join us on the telephone line. But let me put the first question to you, Tauseef Zaman Saab. We all do understand that the global financial conditions are not very suitable. Interest rate, even last night I was watching a report on CNN where they have said that the 0.75% increase in their interest rate. Again, high inflation, but increase in the interest rate for that kind of economy makes a lot of sense because consumer based. And then we all do understand the details of that. At the same time, the IMF, they have said that the global recession is just around the corner. The forecast for the global growth, which was earlier put at 3.2% for this year, will remain somewhat like that, but for the next year they have brought it down to 2.9%. That means that there is going to be some sort of a recession that we have witnessed. Ever since America came into being, sir, we have witnessed 44 recessions. The last was in 2008. That means that the next one is very much due. It should have been somewhere, around 2014-15. But having said that, sir, once the global outlook seems to be pretty murky, what sort of an impact do you see on a country like Pakistan, where the dollar is hovering somewhere around 240 rupees for a single dollar? And on top of that, the IMF conditions still are pretty tough. And they have in fact attached this particular tranche with the fiscal gap that is supposed to be filled in by most likely Saudi Arabia, and that is around $4 billion plus. Where do we stand, sir? We will talk about the political uncertainty as well, but let's start off from this particular point. Your take.
This is all about the trust of the people on the economy. Trust of the people on the economic decision makers. Trust on the economy and the behind the curtain players of the economy. When we look at the Pakistani economy, we produce primarily our own agriculture. We have our own market. We do not get into the foreign exchange issues and all that. It started long ago. In 50s,
all right,
we got the first loan.
Sir, there's a little technical problem with your mic. We'll just replace it in a little bit, but let me take the same point to our friend Syed Javed Hassan Saab. Javed Saab, would you like to comment on this very important point, sir?
There are a number of issues here. We are in a very tight spot. If you look at the global bonds, Pakistani bonds are trading at a steep discount. They're trading at 50 cents to the dollar, 55 cents to the dollar. Just today I checked the yield on these bonds, even the December 22 bond is something like 44%. Now that's extremely poor rating. One would say the market is sort of implying default. Similarly, the credit default swap, which is another measure for risk of Pakistan, is close to 20%, again implying default. I certainly hope that doesn't happen. I think the government is taking very proactive measures to avoid that. There are a number of things that the government has done in trying to meet the IMF conditionalities, the last being the electricity tariffs, which have been increased by 3.52 rupees just recently. And there's a further, I think, about 4.3 rupees that is going to be increased. So once we have done that, the 4 billion is not necessarily just Saudi Arabia. Or from friendly countries, we need to increase our reserves by about $4 billion. Once we do that, I think we'll be well placed at the end of August. The recommendation will go to the board from the IMF management to probably release the 1.17 billion tranche. Now, once that happens, I think, as our finance minister Mifta Saab says, Dr. Mifta, that we will probably start seeing flows from other sources to happen. What is critically important is that the commercial market, the international bond market, that becomes available for us to be able to raise financing. So far, we are really dependent either on multilaterals or bilateral financing. And we really hope that once we are under the umbrella of IMF once again, and the program is effectively revived and there's more funding, we can actually access commercial lending as well. So these are critical things, and hopefully the bond yields start coming down to such more realistic levels. So right now there is some degree, as our other esteemed guests were saying, it's some degree of lack of confidence, and hopefully that confidence is restored once we are back in the IMF program.
Tauseef Zaman Sahab, once we are back in the IMF program, means 22nd, 23rd time now?
That's correct.
Interestingly, now the conditions that have been attached with the release of the money, they're pretty tough for the first time. I mean, they have literally taken control over your financial decision-making process, and they believe that, your electricity bills should be increased by these many rupees per unit within this given time period. Then there's going to be constant. Then you talk about the taxes, whether we like it, nobody wants to pay tax unless until that money is properly utilized for the right people, for the poor segment of society. Then again, you talk about, for that matter, increase in the petroleum prices, and they are at the highest level at the moment, whereas in the international market, they are comparatively well under 100.
Right.
In 2008, during the recession time, it went up to $147 a barrel, I remember. Rupee was pretty much stable at 61 rupees a dollar, whereas in Pakistan, the prices were somewhat like a dollar for at that time, a dollar for a liter. 3.9 something, I remember, was in the United States of America for a gallon. Now, looking at this particular equation and the kind of fiscal shortage that is appearing on almost every single front, plus the IMF conditions, and the most important part is the political uncertainty. If you remember in the last program, you said that the dollar could go up to 250 rupees. And at that time, it was well under 210, I remember. Sir, it's almost there now.
Exactly.
So what's happening now? Where are we lacking? Is it the decision making? Is it just the trust deficit that cannot be changed overnight? What is this mix about?
See, somebody has to take decisions, and unfortunately, the administration and the people of Pakistan, they are unable to take the decision. So, once we are unable to take our own decision, somebody has to. They will do that. What is happening actually? This morning, we had a tax committee meeting at Islamabad Chamber of Commerce and Industry. What they did, they have placed electricity bills on the traders on their electricity bill. Their sales tax is has to go with their rental bill, monthly ISCO bill.
What is that supposed to mean, sir?
Okay.
Does it make any sense?
And the top of it, if you have a commercial property in Islamabad, you have to
Even
pay
a single small shop.
even a single small shop, and that is even closed with the zero bill, you have to pay 3,000 rupee a month sales tax on that bill. This is exactly the state of situation of tax collectors' ignorance happening in Islamabad.
Buy, steal or snatch.
So what we say, first they place this TV license fee in electricity bills. Nobody bothered about it. Okay, there's a small amount.
Very nominal.
So whether you have the license TV set at home or not, whether you are a mosque or anything, any bill would contain 200 rupees, whatever license fee of with the electricity that would go. Now this has reached to the point whether you are a taxpayer or not, whether you are a trader or not, if it's a commercial property with the zero electricity consumption, you have to pay 3,000 rupees minimum.
Why do we have this double and triple taxation concept?
And that is on top of it. Exactly.
That's what I'm saying.
Exactly. So our tax machinery, they have their own issues and challenges. They say, like NAB, give us some portion of revenue collection as a treat, and we can attain this price, this tax collection up to 15,000 billion per year, not a problem. We can do that. That is what our friends at the tax authorities, they say. There's something which is very much achievable, but there's no cherry attached for us in the system. That's why we are unable to do that. What we say all the business chambers, they are in every district. That's by law. In every district carries a business chamber of commerce industry. Outsource your tax collection process to Chamber of Commerce. They know who they are. Give them the targets. This is the kind of money we require every year. We can do that. We can produce.
Can't you do it sector wise?
Sectoral is also there. It started with basically from marble industry.
Okay.
So because if the marble is being processed, so electricity is being used for marble processing, so they placed per unit charge, so that if you are using more electricity, you have to pay more taxes. So it was in percentage. We are all right with the percentages, but if electricity is not, why you are putting a fixed tax? No, for the electricity bill, which is not even, if the shop is closed, and within no time you would be a defaulter. So once we go to ISCO or they say go to WABDA, once we go to WABDA, they say go to FBR. Once we go to FBR, they say
multiple window operation.
Once we go to FBR, they say go to your lawmakers, we are just the executing agency.
Well, this is the most unfortunate part, sir. This is where we have failed miserably, I would say, sir. We have also been joined in by Tahir Abbas, Head of Research, Arif Habib Limited, and let's see what his take is on all these issues, because when you look at these issues, there's a long list. Now, first of all, sir, Tahir, welcome to the program and thank you very much for your time. Now, tell us, please guide us, what's going on in our economy? Honestly speaking, I'm clueless, so most of my colleagues are as well, because you talk about IMF, you end up hearing something else. You talk about the sale of the state enterprises at those prices. We'll definitely talk about that also. Look at the behavior of the stock market, sir. Look at where the rupee is going, where the dollar is heading. You talk about inflation, sir. It is definitely over 20%. You talk about, I mean, if I start off, sir, there's a long list. Look at where your interest rate is, 15%. Who's going to take the money? I mean, there were few people used to take a lot, but sir, for the private sector, what is available at the moment and what sort of a percentage is there? And then on top, you are trying to put more taxes, squeezing the economy more. I mean, does this equation make any sense to you?
Thank you for inviting me. Yes, you are quite right about the facts which you have stated with respect to the economy. I would like to shed some light starting from COVID. Obviously, post-COVID, we have posted some strong recovery in the economy. And with the passage of time in 2021, the commodity prices started to going up. And obviously, there was some pent-up demand in the economy. And gradually, with the passage of time, when commodities are on the rise, we have witnessed Russia invasion to Ukraine, and that drastically changed the global economic scenario, I would say, especially on the commodities side. And obviously after that, oil prices increased significantly along with other major commodities, including gas prices, LNG prices, wheat prices, sugar prices, cotton prices, you name it, each commodity which we import basically. So in a nutshell, what had happened basically, obviously we have posted a strong growth of around 6% in fiscal year 22, and with that pace, obviously, today State Bank just released the current account deficit for the month of June, and we have posted a current account deficit of 2.3 billion, taking the cumulative deficit for fiscal year 22 at $17.2 billion. Obviously, that deficit which we have posted, we cannot sustain that deficit. So basically, we need to slow down. I would say partially there is some impact of obviously the global commodity prices, and obviously there were some relaxed policies due to which the economy grew quickly, and that was not sustainable. So basically what has happened, to slow down that economy, we need to obviously increase the interest rate, and obviously inflation was soaring at around 20% plus level, and is expected to remain elevated in the next 3 to 4 months at least. Likewise, obviously, for the currency has depreciated so quickly in the last 2 weeks, if you have witnessed. But obviously, both of these things will result into a major slowdown in the economy. And that is what we are witnessing at the moment. And as Federal Minister yesterday quoted that for the month of July, we have witnessed a major slowdown in the imports, and he said that the imports till 25th of July was around $3.8 billion. And we will end up at around $4.8 billion for the whole month, and most likely we'll going to post current account surplus. So basically, what has happened, not only with us, but with I would say it's a sort of global phenomena that we and the globe all the major countries are moving towards stagflation. So in stagflation, what happens basically that inflation rise so quickly and the GDP growth is too much low, or I would say in a negative. So this is basically the problem. And it is around the world. It is not specifically to Pakistan. But yes, for Pakistan, we need to obviously adjust some fiscal policies. We need to achieve sustainable growth. We should not run after the growth number of 5% or 6%. We can only achieve a sustainable growth in a manner that if we take some long-term sustainable decisions.
Now there is a question, sir. What did the previous government do that they were able to exceed the tax target, which was set at 6,000 billion? They crossed by 1 billion plus, 100 billion plus rather. And since the global outlook, even in the year 2021 was low because of various reasons, the oil prices in particular, despite the fact that the oil prices were so high, we were able to achieve this 5.97, let's round it 6% growth rate target also, achieved by the previous government, announced by this government in the previous budget. Now, sir, the prices of coal, they have been increased within a year by 5 times. Prices of LNG, 10 times. And I fail to understand that considering the current political scenario in Pakistan, the political turmoil, let me use this word, and the economic meltdown in various sectors, now the government, since the stock market is hitting the bottom, the rupee for the first time is so shaky that nobody knows what's going to happen, not even sure when the IMF is going to grant you the money or the bailout package for that matter. And coupled with a couple of other factors which include inflation, which you just mentioned is over 20%. Some analysts say even it could go beyond 35% in the coming months. Your interest rate at 15%. The current account deficit is right in front of you. Your exports in terms of volume aren't increasing. Yes, because of the rupee factor versus the dollar, that's another issue altogether. Now, sir, under these given circumstances, don't you think that this, I won't say it's a doom scenario, I don't want to be very pessimistic, but it's not a good picture at all.
Can I come in?
Yes, please.
Starting from your first point with respect to the tax collection, we collect 60% of our tax at import stage. So obviously, if you just loosen down the economy and we just import more, so we can easily achieve that target. However, I would say that the last government has done some good work on the taxation regime, specifically on the retail sides. But nonetheless, obviously, the majority of that growth come from the imports, which we have witnessed at the historic highest level. And today, obviously, we are witnessing that we have ended up at around 17.2 billion of current account deficit for the fiscal year 22. So on the inflation front, yes, it is expected to remain elevated for the next couple of months. I would say it can cross 24-25% for the month of August. But obviously, after that, it is expected to come down. And by the end of this year, fiscal year 23, I would say by May and June, it will be under single digit. That is primarily because of the base effect. And secondly, we are expecting the commodity prices to cool off. Regarding interest rates, yes, obviously, to curb the inflationary impact, the State Bank has acted. And the interest rate has increased to 15%. Obviously, we need to stay with that 15% for some time. But gradually, by the end of this year, we are expecting some monetary easing, given all the things remain lucrative, or I would say sufficient enough for us. Lastly, the currency. I would like to add a specific point with respect to currency. The currency has depreciated significantly in the last 2 weeks. we may see the direct impact of the currency in the inflation, but there is a significant impact of the second round of impact for the currency depreciation. So, for instance, just to give you an idea, the government has increased the power tariff by around 7.9 rupees per kilowatt hour. So NEPRA has calculated along with the ministry the average tariff at around 24.8 rupees per kilowatt hour, and that has been calculated at PKR USD parity of 200. And currently the PKR USD parity is around 230. So it means that if the currency depreciated further, your tariff will increase from 24.8, which has been suggested and recommended by government. So that is the same case with the gas prices as well. So currency depreciation has significant impact on the economy, and the second round of inflationary impact would be significant because of that. So basically, yes, we agree that currency should be market determined, but obviously when this impact of currency would be visible in the second round, inflation is expected to increase further going forward. However, to conclude, I would say that obviously we may see a period of strict measures and policies and elevated inflation, higher interest rates for the next 4 to 6 months, and going forward from there, we may see some respite on the inflationary front, and by the end of this fiscal year, that is June 2023, we might see some monetary easing.
All right. Now, Syed Javed Hassan Saab, a very important issue that has been raised but hasn't been discussed in detail yet is about an interview that was given by none other than Miftah Saab, and who is our finance minister. Says that perhaps UAE would buy about 10% of the shares of certain state enterprises at a very discounted rate of 10%. And currently, when we talk about those particular shares, they are at their lowest level. And then he said that we'll give them some money, let's say 2% or 4%, and we'll buy those back. And that was put in a program. I'll come to you, and I'll take your point also on that. The issue is that when you talk about Sui Northern, Sui Southern for that matter, OGDCL, Mari Gas, PIA for that matter, so when these shares are hovering at the bottom, is it the right time to sell them off? These are the government enterprises, rather to settle those issues in an appropriate way. These are your assets. Tomorrow you will be selling something else, and perhaps a day after a few plots in in the diplomatic enclave. What I'm saying is that what's going on, sir?
If I may answer that, I mean, I'm not too concerned about this idea of selling public assets. Yes, they are public property, but so long as they're done in a transparent fashion. What is one concerned about is the fact that there is no scrutiny about it, and any scrutiny is going to be dispensed with. That is a slight concern. However, I think in favor of what Dr. Miftah is saying, we have to be very clear. He says it's a sale and buyback arrangement. If it's very strictly applied, if we assume that it is there's a period of say 3-4 years where you can buy it back, then effectively it's a loan. You're putting your asset there as a security, and you're taking a loan. And since they don't have confidence in us, given that in the past we have taken loans and we have not returned it and just kept rolling it, I think it is a fair point that we right now we need to raise that 4 billion any which way we can, because the consequences of not doing so will be dire. If we don't meet that 4 billion requirement which IMF has set on us, and that too is because we have not been compliant with in the past of meeting their conditionalities. So we need to meet that 4 billion requirement. If we don't and we default, the consequences are going to be much worse than letting go 10% or 20% of PPL or one of the state-owned companies. So I think one has to be a bit realistic about it. However, the question about there not being any scrutiny or any future liability, that there are obviously reasonable questions about it. But I think it's not really sort of selling family silver, as some people put it. This is more a sale and buyback arrangement.
But still, the people should be taken into confidence. People should know exactly what's going on. And all those people who are associated or they are working there. Listen, sir, it's not about only the workforce or the people. a lot of people do not understand the concept of human resource management. It's about giving them, definitely, you raise the salaries, you give them incentives. But sir, looking at what we have studied, the organizational development grid, we do understand that there has to be a proper curve at 5.5, where the concern for production and the concern for employees should be taken care of. Unfortunately, in the public sector, it's more concern about the employees. In the private sector, it's the more concern about the production. But one has to keep the balance. In this particular case, absolute mismanagement, absolute bad governance has led us to this. A steel mill, for that matter, used to give you a lot of profit not that far long ago, sir. Now look at the total overall value of the assets. But I still remember they were being sold just like peanuts to certain people. I can name them if you want, sir. You actually know them.
You're absolutely right.
So transparency element has never been there, sir. For example, I'll just give you a little example. I live in Pindi. There is this huge head office of Pakistan International Airlines there on Mall Road. Correct, sir? I'm sure everybody has visited that. Sir, that property is worth into billions. And that was, in fact, I remember, I will not again take the name, one of the consortium which were very, very keen to buy PIA. Did you know what was the price offered for that property? 3.5 crore rupees. You don't even get a 500-yard residential plot close somewhere, sir.
Okay.
I mean, this is ridiculous. So this has to be transparent. This is the money which you have paid, I have paid, everybody has paid to build up that asset. Just because of the negligence and stupidity of the people who were governing that or who were appointed there by the political authorities ended up doing this. Why should we pay the price as Pakistanis, sir? We have been squeezed enough. A lemon has a limited juice, sir. After that, you'll squeeze it more, sir, that,
Faisal, I would not agree with you more, but all I'd like to say is that transparency, there can be no question marks. The process has to be explained to the public, and the public needs to be satisfied. I know there's a certain degree of waste, but even in that, there needs to be clear transparency. Having said that, this is not a sale of strategic assets, it's a sale of shares. In fact, what we are doing is placing the shares in security and against an interest rate. So,
but if we are unable to pay that money or those guarantees back, sir, they will that could be turned into a hostile takeover also. Let me use this James Bond strategy, the hostile takeover. And interestingly, if you remember, I'm not sure because I haven't gone through that particular document, which that is also given to media on regular basis, where there was this clause that if Pakistan is unable to pay that certain amount of money which we owe to Saudi Arabia or UAE for that matter, in Saudi's case, yes, they said, well, we will be able to take your property from you if you are not able to pay within few days or something. I think it was 72 hours or something.
I certainly hope the intention is not to let go of these shares. I hope in 3
but
years...
But so the idea, I would beg to agree. Well, your take, Zaman sir, please.
What happened? We have a history with UAE. We sold our PTCL, and you know to Etisalat, and you know exactly what happened. They got over on all real estate. Then they said, "Title, give us the title." And then with those titles, they went to local banks and asked them to loan against that. And when we asked where is the foreign exchange we were looking for, and they said that's all right. It's a bilateral relation. So please don't do that. So once we have gone through with this exercise, what is the issue with the state-owned enterprises? It is the issue of governance.
Sir, every third month you are begging for money to those countries. I mean, is it your fault or their fault?
Who's the responsible for the governance? The government. If they are unable to do that, if they don't have the competency to govern, they should leave. They should face the music. Why we should give our assets, in pennies? They are worth of our national pride. These all are national pride, which is extremely doable, viable. Closing them for nothing and saying that they are not performing and we should sell it out to foreign country because it's a nice, clean way to get whatever out of your wish. You can do that, but please, for heaven's sake, don't do that. They are worthy enough that we can do that. We can manage that. We can roll over and we can grow out of the situation.
There could be a domestic, public, private sector kind of a management, and why to sell to UAE for that matter? How much money? I'll just give you one example, Tauseef Saab. During the last 5 years, the overseas Pakistanis The money they send is called remittances, correct?
Yes.
$145 billion. Please correct me if I'm wrong. $145 billion dollars.
Yes.
Whereas from USA, UAE, Saudi Arabia, China, not even $30 billion.
And go to BOI.
You can. Why can't you come up with some sort of an idea where you can like this? What was the name of this program through which the Americans and the overseas Pakistanis were investing in Pakistan? Roshan Pakistan program.
Roshan Digital.
Roshan Digital. All right. So now what I'm saying, can't we have a proper appropriate program
Exactly.
that can generate this kind of money?
We can have overseas Pakistanis bank, ask them to invest, go over, take over a board. If you wish to give the management of these institutions, come up with overseas Pakistanis board and give all the assets to that board and let them manage that. Trust me, if they can't do that, nobody else in the world can do that. UAE have no interest in Pakistan to take care of our interests. They have all the rights to
let
take
me
care
be
of
very
our
honest.
interests. They have
UAE
all
and
the
Saudi
rights.
Arabia, they're so inclined towards India. That is a bigger market with more money, more. I mean, we always do comparisons, right? So if I start doing comparison, they'll just end up blaming me for an Indian agent. The point is that at the end of the day, if they look at Bangladesh, $80 billion of reserves. They have sorted out everything, and look at where they are.
They have gifted mangoes to our Prime Minister.
Well, it's good. Yeah, last closing comment from you, Syed Javed Hassan Saab.
Very quickly, I think all the criticisms and concerns are very valid. I think if we can have alternative ways of raising that 4 billion rather than putting our state assets on loan in the manner we are, effectively it's pawn shop, that it should be avoided. However, the prospect of default, if we don't get the funding from IMF, would be disastrous. We should simply not forget that. So we
now again, Miftah Saab says, well, we are far away from default.
No, I think
because I still fail to understand, has Sri Lanka defaulted? If that is what default means, or how the Argentinians defaulted, if that is what default is, where 30% of their money, the peso as they call it, went down within one night. So people started hiding their money under their pillows. This is what has happened in Afghanistan, for that matter. Even their currency, Afghani, is much better than ours. I do not know what's going on, but I think multiple issues. It's a long story. But anyway, Javed Saab, was a pleasure having you, sir. Wish we had more time, we could have talked more. And thank you very much, Tauseef Saab. I would also like to thank Tahir Abbas Saab, who was with us on the telephone, Head of Research, Arif Habib Limited. And that's all we have for this hour. I'll see you inshallah tomorrow at 8:05 p.m. Till then, you take good care. Allah.